Welcome to today's video where we'll explore the fascinating world of dividends. So, what exactly are dividends? In the simplest terms, dividends are payments made by a corporation to its shareholders. When a company earns a profit, it has the option to either reinvest that profit back into the business or distribute a portion of it to its shareholders, the owners of the company. This distribution is what's known as a dividend. Dividends can be paid in two primary forms: cash or additional stock shares. Cash dividends are the most common and are typically deposited directly into the shareholders' bank accounts or brokerage accounts. On the other hand, stock dividends involve issuing additional shares of stock to existing shareholders. Regardless of the form, the basic intention is to reward shareholders for their investment in the company. Now you might be wondering, why do companies pay dividends? Paying dividends sends a positive message to shareholders and the market about the company's financial health. It reflects a company's confidence in its stable earnings and cash flow. For investors, particularly those seeking steady income, dividends provide a reliable source of income, often seen as a reward for their trust in the company. This is why many investors are attracted to companies with a track record of regular dividend payments. Dividends are typically paid on specific dates, known as the dividend payment date. Before this, the company will announce an ex-dividend date, which is crucial for investors. To be eligible for the next dividend payment, one must own the stock before the ex-dividend date. Miss it, and you won't be entitled to receive the upcoming dividend. It's important to note that not all companies pay dividends. Typically, newer or rapidly growing companies may choose to reinvest their profits into expansion, research, or other business opportunities. Conversely, well-established companies with steady earnings, like utilities or consumer goods companies, are known for their consistent dividend payments. In summary, dividends are a powerful tool for both companies and investors. For companies, they offer a way to distribute profits and showcase financial stability. For investors, they provide income and highlight potential good health in a company. Whether you're a seasoned investor or just starting out, understanding dividends can be a key element to building a successful investment strategy. Whether you're a seasoned investor or just starting out, understanding dividends can be a key element to building a successful investment strategy. Thank you for watching, and don't forget to subscribe for more insights into the world of finance and investing.